Hello, I'm Mario Toneguzzi with Real Estate Spotlight. Joining me today is Renata Reid, who is a realtor with Sotheby's International Realty Canada in Calgary, and Kristen Young, who is a mortgage broker partner with the Merge Mortgage Group in Calgary. Thanks for joining us today.
Thanks for having me.
Thank you for having me too, Mario.
Okay, we're going to talk about interest rates. Now, the Bank of Canada has basically done nothing with the latest announcement with the interest rates. But let me ask you a little bit on the recent changes, maybe the changes in the past year on interest rates and how that's impacted the real estate market in Calgary. Renata, you want to start off?
Yeah. There's been a lot of caution in purchasing and whatnot, and especially with the market, what's happening with the economy and what's happening there. But interest rates have been, people have been waiting and kind of trying to figure out, is it going to go lower? Should we wait? Should we, so there is that sentiment out there. And I feel like some people are just they have to move, and of course they're moving forward, but there is some hesitation, and now with this rate hold, this is going to be interesting to see how people just end up moving forward anyway now, because they're not sure if it's going to go up or down on the next term. So, Kristen, how are you finding it with what's
Yeah,
happening?
I would totally agree with you that there is a lot of just sitting back and waiting to decide, and there's not that urgency. For some perspective, we have seen a dramatic decrease in the last 12 months on interest rates. So it has, I think that people don't realize that, but rates, whether that it's fixed or it's variable, have gone down probably 1 to 1.5 percentage points, which really makes a big difference. And then the other piece that I think people don't realize is that with the government's new regulation that has come out, we have a lot more options for getting people into properties that maybe they thought would be out of reach before. So the first time home buyers that can now do the 30-year amortization, which really brings an increase into their ability to qualify. And that's huge for our market because there's a lot of people that, before were maybe sitting around that 4 to 500 range. And really to get into a single family home, you probably are closer to over six. But now with the 30-year amortization, that's going to give them about $40,000 to $50,000 on their purchase price. With the lower rates, now they're getting, maybe a year ago it would have been approved for 500,000. Now they can get that 600.
So maybe that okay. I'm a journalist. I'm not a realtor. I'm not I'm not a mortgage person. So
Mm.
explain this to me. Like I know that realtors like to have people go through and do pre-approved mortgages, right? And to be ready. How does that work? With maybe Kristen, you're in the industry. How does that work? When if I get a pre-approved, that is it pre-approved that at at a particular rate, or like how does that? Yeah, maybe explain that a little bit.
Yeah, I think that that's a phenomenal question because it really can work in, I would say, easily two different ways. One way is we pre-qualify you. So we look at your documentation, we look at your application, your credit, your income, and then we can say based off of that, this is what you'd be approved for. And the bank hasn't necessarily looked at it yet, but the broker has, and we have strong confidence with that. The other piece is where we actually submit the file to the lender, and that's where you're getting an actual certificate, usually that is good for 4 months, and you have a specific interest rate. And so when we're in a rate increasing environment, it's very important for us to get those pre-approvals from the lender directly. Um, so that we have, the clients protected from any rate increases. But when the deal goes live, so when they actually make an offer, we shop around again. So we're not tied to the original pre-approval.
Okay. Now, Renata, in your
Mhm.
experience lately, what are you finding that people are doing when they're buying homes in terms of what are they choosing for mortgage rate for mortgages? Are they choosing fixed rates or are they doing variable these days?
There's a bit of a mix. People are starting to go towards variable a little bit more than the fixed rate because of the changes that are happening. So, but there's some uncertainty with that still, and so I'm finding that people are still really liking the fixed rate because it gives them more certainty in an uncertain market, and like we don't know what's happening, this way or that way with the elections or anything like that. So they are. That way they just know what their payments are going to be for the next 5 years, right? So it really just allows them that certainty. And it variable was popular before when things were really going down all the time, but that's not always going to be the case right now. So seems like fixed is still a really good option. Variable if you have risk tolerance and, in you. So it really just depends.
Kristen, finding the same.
Yeah. Yeah, I would agree. So one of the interesting things is kind of when you look at the last 50 years, most of the time the variable interest rate is about 1 percentage point lower than the fixed because it's higher risk. So you usually get bigger reward, higher risk though. But in this market, the fixed rates have actually been below the variable rates. So the fixed rates have been very popular because they're actually a lot of the times a lower rate than if you were going to take the variable. So usually when I'm talking to clients, I ask them like, what do you think is going to happen in the next few years? Because uh, depending on their personal outlook, if they think that, things are not going to improve, then they should probably take a variable because that would mean that we're going to see rates drop. But if they think that, we're kind of at the bottom here and things are going to stabilize, then the fixed is a great option. And exactly what Renata said, like some people just they're fixed people. They usually tell me I'm a fixed person. I don't want to do the variable. And
Mhm.
then usually variable people are like, yeah, I'll do the variable. So yeah, it's definitely a personality and outlook uh, dependent.
So, just a couple of quick factual stuff here, Kristen. What are we generally looking at in terms of interest rates right now for fixed and for variable? What are they?
Great. Yeah, great question. So I would say that the fixed rates are slightly under 4% and kind of from under 4%, let's say the 3.9s up to, let's say the 4.5s, depending on what term and how much down payment in that. And then in the variable rates, we're going to see rates right around 4% in the best case scenario and about 4.5% worst case. So that's really interesting because right now they're pretty much the same. It's kind of the first time that that's happened. And now that the rates are the same, I find more people are open to doing the variable because they think the variable will drop, even though it didn't drop this morning. I think they should have dropped it, and I think they're just slow to making that happen because I think it has to be dropped.
And in terms of the fixed rates, Kristen, what are people choosing in terms of the number of years generally?
Yeah, great question. So, over the last 12 months, the most popular was definitely 3-year fixed because people
Mm.
expected that the rates were going to come down. They didn't want to lock in long term. But I would say over the last 2 months, the 5-year has become way more popular because people think maybe in 5 years, the rates could be higher than they are now, or in 3 years, the rates could be higher than they are now.
Hmm. Renata, what advice do you give a lot of your potential buyers out there, if they're looking at, buying or if they're looking at maybe refinancing, what advice would you give them right now?
Well, yeah, I generally send them to Kristen for good advice because she gives really amazing advice on that stuff. But for refinancing or if they need to move, I do have people that are kind of at the end of their terms. They're like, do we move? Do we stay? Often times they decide to, at this time they do decide to shift. A lot of people that I've been talking to lately are starting to try to just down like move to a smaller home and
Mhm.
actually shift towards something that's a little bit more certain, just giving them a little bit more of a buffer. If they're in an expensive home, they're going to that smaller home just to kind of deleverage a little bit. So that has been top of mind for many people. And then there's other people I'm working with that are like, no, let's move up right now. So I have a kind of a good range of each of them.
Okay. And Kristen, I don't know if you can answer this, but uh, I think I saw someplace recently where there's apparently this year there's a lot of renewals coming up, mortgage renewals. Is that the case? More than normal, or
I would say last year was probably bigger than this year. So you probably did hear that, but I would say that that was last year, not necessarily this year. The interesting thing now is that all of the low rates are pretty much gone. Like in the next 6 months, those people that locked in on that 5-year fixed 5 years ago, they're all losing their rates. So yeah, we're coming to the end of it, which in some ways is good because people's expectations have been so much more aligned with what is reality now. Whereas before, when rates went up so quickly, and people were coming out of those low interest rates, it was a lot of sticker shock.
yeah, yeah. One last question, I guess, for both of you. Where do you think this whole interest rates scenario's going in the next, well, for the rest of this year?
So I think that they're going to go down. I do. I think that with basically the uncertainty that's happening with the election and with the tariffs, even if that resolves really quickly, I still think that they are going to need to bring the prime rate down. And I think that we will see rates go down.
Renata?
I would completely agree. And I think the affordability still is an issue for a lot of people, and bringing those rates down will just allow them to get into homes that they weren't able to in the last, couple of years with the higher rates. So definitely needs to still come down.
All right, wonderful. Well, thanks so much, both of you, for joining us today.
Thank
Thank
you.
you. Thanks for having us.
All right, that was Renata Reid, who is a realtor with Sotheby's International Realty Canada in Calgary, and Kristen Young, who is a mortgage broker partner with Merge Mortgage Group in Calgary. I'm Mario Toneguzzi with Real Estate Spotlights. Thanks for joining us today.